you're going to do reactive trading. You are going to wait for confirmation to get a trade. So first of all, we are going to today we are going to look at Malaysian engulfing. Okay. So now,
Mhm.
what is Malaysian engulfing? Okay, what is an engulfing pattern? Okay, so before I introduce you to Malaysian engulfing, I will introduce you to a bit. I will introduce a bit of supply and demand, talk about other blocks, and they are all centered around the same place. Okay, so when it comes to supply and demand, we are saying that in an uptrend, the last bullish candle before the market started selling is the supply zone. So in this particular situation, market was going up. This last buy candle before this sell is your supply zone. Okay, which in ICT will be called the other block, which in smart money they will call it FU candle, what candle. It is still what the supply zone, it's still the other block. It's the same concept. Okay, and the definition remains the same, the last bullish candle before the sell. Okay, for a downtrend, the last bearish candle before the buy. Okay, so sorry. So in a downtrend, the last bearish candle before the market started buying is a demand zone. So here we have a demand zone. Here we have a supply zone. Okay. Now, so apart from that, we have what? A drop-based drop. So this is a rally-based rally in supply and demand. Okay, this is the supply zone. Market was going up, we call it rally. Okay, when it turned around, the last candle before it turned around, there was what? A drop, a rally. The last candle is the base before the drop. Okay, now when it was going up, it was a drop. The last candle before the buy is what? A base. So we have a rally, base, rally, a drop, base, drop. Okay, in that same situation, if the market continues going down, so we have a drop, a pause in the drop. You see, we drop and there's a pause here. The so that it is like the only bullish candle or the bullish candle among a series of what? Sell candle, bearish candle. So here, this is what a drop, base drop. Okay. In that same situation, you have a rally, base rally. That is not what you are going to do. But just to give you an idea, so that when you start doing engulfing, you don't get confused when somebody introduces, oh, this is a supply zone, and you have an agreement with him. It's the same thing. Okay. Right. So that is what the a bit of supply. Okay, so there are two types of what supply zones. We have the rally based drop, okay, rally based drop, and the drop based drop. And then there are two types of what demand zone, the drop based rally and the what rally based rally. Okay, so that is easy. Okay, that's easy to understand looking at the example. So, but that's not the main thing. Okay, so now let's go to the engulfing. I'm going to give you a history in terms of teaching, okay, chronologically, so that we will focus on a particular type of engulfing, okay? Now, the definition of an engulfing is that it is a two candlestick pattern, okay? Two candlestick pattern, one bearish and one bullish, okay? So, the second candle has to close beyond, okay, the open of the first candle. So that's a basic definition of what an engulfing is. Okay. Now, one candle has to close beyond the opening. And so in this particular situation, I'm going to what? Allocate open. Okay, so it's going to be the open. So the focus is on the open. That's the definition. If you go to you buy any indicator, yeah, saying that okay, mark engulfing, to mark engulfing, that the bigger candle has closed beyond the open of what? The smaller candle. Okay, so for instance, in candlestick patterns, oh, please, which of the screens do you see? Do you see a bigger screen?
We are seeing yeah, the blue screen,
Okay.
I'm seeing you drawing the purple
Oh,
lines as well.
all right, all right, all right. So I thought you guys were seeing that smaller screen. Okay, so
No, we are seeing the engulfing patterns. Yeah.
all right. So you see, so this one marks the engulfing based on what the open of the previous candle. So for instance, this is how it looks like. Okay, I think I have examples here. Right. So we have first candle. You see the opening of the candle. This means that there is a bearish candle, right? And this is the close. Okay, so when this candle closes, the next candle is going to open at the same level. So now here we are marking the engulfing and defining the engulfing that it has closed beyond the opening of the first candle. So this is an engulfing. This one has swallowed this one. This second candle has swallowed the first candle, okay? But the definition is that, so which means that if the candle had closed just right above this, okay, this system would have called it an engulfing, okay? Okay, so look at this one too. Open, close, and then we have closed beyond the open of the candle. So it's still an engulfing. All right. All right. So now there are two types of engulfing. You have bullish engulfing, bearish engulfing, which I believe that everybody, all of you know. Okay, bullish engulfing and bearish engulfing. Okay, and this one, the definition is just based on what how the candle is closing beyond the open of the first candle. Okay, now we will redefine, okay, the engulfing pattern, right? So engulfing pattern can be more than two candles. So in the previous example, we were talking about engulfing that has only two candles. Remember the definition said that engulfing has two candles. It's a two candlestick pattern, okay? But now we are redefining it to be more than two candlestick pattern, right? Okay, that close beyond the open. So it's still the open we are talking about, but here we are talking about what? Two or more candles. Two or more candles. Okay, closing beyond the open of the first candle. So for instance, yeah. So here we have an open price, we have a closing price. See, this candle could not close beyond the open. Can you see? It could not close beyond the open. Right. Now that it has closed beyond the open, our definition is that yes, so this candle has engulfed, right? So the engulfing is no more a two candlestick pattern, but more than two candlestick. It can be 100. So far as we are closing beyond the close. So here you have two candlestick, three candlestick. This is the open. This candle could not close beyond the open, so it's still not an engulfing until the third candle closed beyond the open. So now we have engulfed. Do you understand?
Yes.
Yes, so this is an engulfing. All right. So one more example. You have this big buy candle, three sell candles touch the open, doesn't close. So it's not an engulfing until this one closes beyond the open. Okay. All right. So these are some of the examples. So in this particular situation, okay, this situation, what you are seeing here is this. This candle, right, has not been engulfed here. It got engulfed until it closed here, right? But this is an engulfing. This is also an engulfing, right? This didn't engulf until this candle went and closed above, okay? All right, so
Mm.
this is a good example of what? Now we have to redefine the engulfing again. Now we are redefining the engulfing pattern to fit our strategy. So what you saw earlier is the general definition of what an engulfing is. Okay. Now, can we twist it a bit to make it favor us or to make it look like, make it different from all what everybody is doing? So now, for the purpose of this strategy, engulfing will be defined by closing beyond the wick and not the open, right? So now the keyword that has been introduced is what? The wick or the shadow and not the open. Okay? So now instead of going above the open, we want to define it. We want to be tight so that okay, this is really an engulfing. Close above the open. So now, okay, so this applies to all the engulfing that you have learned. Okay, now we have an open price. Okay, in this particular situation, we have closed above the wick, above the body. See, we went above the body. I say the body, above the open. Can you see? Yes, you close
Yeah.
above the open, but this is not an engulfing based on strategy. Based on our strategy, the engulfing should close beyond the wick. Okay, so since it didn't close beyond the since it didn't close beyond the wick, we won't call it an engulfing until we close about the wick. So now we have a closing about the wick. So this is our engulfing, right? So another example, right? So we have a wick, price pierces through the wick, closes below the wick. This is not an engulfing until you close above the wick. So now we have engulfed this candle. Okay, right. Here, same example, not an engulfing, but it is an engulfing in the world in other places because we close above the open. But to our strategy, the engulfing has to close beyond the wick. So now we have an engulfing. Okay, right. So now it takes us to two engulfing stick, two candlestick pattern engulfing. Yes, now it's an engulfing. Okay, not the open. Now our engulfing will be marked by wick to wick, wick to wick, and this is what the engulfing you are looking at. Okay, this is the type of engulfing close above the wick. Okay, do you understand?
Yep.
You understand? Okay, now if there is an engulfing, and an engulfing is going to be our entry point, it's going to be where we are going to look for trades. Okay, so if there's an engulfing, then there's also an engulfing field, meaning that sometimes the point of interest that we are looking for, which is an engulfing, is able to fail. Okay, so what is an engulfing field? An engulfing field, an engulfing candlestick, okay, are supposed to be reversal points. Engulfing candlestick patterns are supposed to be reversal points, okay? So if they are going to be reversal point, when the engulfing fails to reverse price, it becomes an engulfing field. Okay, so how does it look like? Okay, so for the EG, so an abbreviation of engulfing is EG, and an abbreviation of engulfing field is EF. For an EG to become an EF, candlestick, okay, the candlestick has to close beyond the width of the on the opposite side. Okay, so this is easy. So now look at this. This is an engulfing. We mark the engulfing using the wick. Okay, so we mark the top of the wick and the bottom wick. Now this is an engulfing. For this engulfing to fail, okay, price has to come back. Okay, so you see, this is an engulfing. So here in this particular situation, this engulfing was a reversal point. You see, price came back to the engulfing and pushed price up. Now, in the second scenario, okay, price came and then closed below. So the point is that it closed below what the wick, right? It closed below this wick, right? So if you didn't have a closing below the wick, it is not an engulfing field. For instance, when this one rejected, this is still a rejection, right? It's still a rejection. But when you close below, then this engulfing has failed. So this becomes an engulfing field. Now, what are you going to use it for? This is how you're going to use it. You're going to be a seller instead of a buyer. Okay, here, price came back, you're a buyer. But when price failed to push price, maybe did it and then came to break, then this area become a selling zone, okay? A selling zone. This a buy zone becomes a selling zone, a sell zone when it fails. Okay, do you understand?
Yes.
Okay, so
Yes, please.
this is an engulfing field. So another example, price comes and just straight through, right? So this becomes an engulfing field, okay? This can be a breaker in ICT or a mitigation block in ICT, right? Or in smart money, right? But this is an engulfing field. It failed. So right now, okay, you sell here. But yeah, it could be that it will fail again. It could be that it fails again. Price just comes, then this becomes what? An engulfing field. Can you see? Right, let me do it properly. Let's say after this, price comes and then you have a big candle like this. Okay, this one has failed again. So where is the engulfing field? This becomes the engulfing field. after we close beyond the way. Okay. Yes. So does it mean that if this one is going to fail, our stop loss is going to be hit? No, you will not even take the trade. If this area, this engulfing field is going to fail, okay, you will not even take the trade. If this one is going to fail, you will not even take the trade because you will not have confirmation. You will not have confirmation. Okay. So let's see if there are more examples. Right. So price, this we use 3 candles, we use 2 candles, and then it failed. Okay. All right. I think okay.
Can I ask a question, please?
Yes, yes, go on.
Can we generalize that the engulfing field is an example of a breakout?
No, not at all. It's an example of it can be a breaker or a mitigation block. Okay. So a breaker or a mitigation block depends on how it was
No,
formed.
I'm talking about breakout.
Yeah, a breakout. Yes, yes, yes. It's a breakout. It's a breakout. Good. Breakout. Okay. So a breakout. So in what we did, okay, we are looking at, you see, in SNR, okay, breakout will be a close above this level, right? Above the, sorry, above a break above or okay. It's going to be a break above that A shape, right? That is price closing above it. But in engulfing, okay, a breakout will be a close above the wick. Okay, so that is the engulfing field. So the engulfing field is a breakout, right? Okay, so now in this strategy, okay, our interest, EG and EF are going to be our only buy and sell zone, nothing else. Okay, in our strategy, EG and EF are going to be what? Our only buy and sell zone and nothing else. Okay, so we're not going to look for any other thing. We are looking for engulfing or engulfing field. Those are going to be our strategy. Okay, so I think, all right, so being able to mark them successfully is key to the success of your strategy or this strategy. Being able to mark the engulfing, okay, or being able to mark an engulfing field is the key to the success of the strategy. Okay, all right. So in this particular example, you see we have, sorry, we have an engulfing field. Can you see? This is supposed to be a
Yes.
zone. Price count.
Yeah, yes, please.
Yes, and tap inside and it sells, retest the level, sells again. Okay. Now, in this particular situation, can we identify the engulfing and engulfing field?
Yes.
Hold on. Okay, so where are we? Okay, so in this situation, do we have, can you see engulfing and engulfing field? Yes, right? So here, this is an engulfing. Can you see?
Yes.
Yes.
All right, so you see that here, price came to this engulfing, went up. Price came into this engulfing, went up. Price, okay, so this was also an engulfing before going up, right? Now, is there an engulfing field here? See, this one is not an engulfing field because price couldn't close below price. You see, this one didn't engulf this candle, so we don't have an engulfing field here. Okay, so we have engulfing, price went up, created an engulfing here. So this is an engulfing. Is this one a bearish candle? Yes. So this is also an engulfing, which price being used. Okay, so went up, wait, went up, created this engulfing. Now, price is it here? here, there was no engulfing field here until this candle. Can you see? Now this candle closed below this wick. So now we have an engulfing field. So now price comes back to the engulfing field. Now we have a new engulfing cell. Price comes inside the engulfing cell, right? And then breaks below this. Price reacted to this engulfing to pull back into this particular engulfing to sell. Okay. Now price reacted again to the same engulfing from the beginning to push price back to this engulfing. Okay, to push price back to that engulfing. Okay, to push price back to that engulfing. Now we break below this, right? Look here. This is the engulfing. Remember, several candlestick pattern, right? It wasn't an engulfing field until this candle closed below, right? Price comes back, uses that engulfing field to continue selling. Okay, now is this one an engulfing field? Okay, ask you if this is an engulfing field. I want yes or no. Comment. Is this an
Yes.
engulfing field?
Not that one.
Okay.
No, please. It's an engulfing.
Yeah. I'm talking about this bearish candle. Okay. All right. If it was supposed to be an engulfing field, then this candle should have closed above this. You see, should have engulfed it. So first of all, you look for engulfing. This is not an engulfing. This candle, black candle, was never engulfed by these two buy candles. So this cannot be considered as for engulfing field. Okay, right. Because the candle couldn't close above the wick, this is not an engulfing field. This is just an engulfing here. All right. Okay.
Yes.
But
Yeah.
this is an engulfing field. Why? Because we engulf this candle. See, we engulf this candle, never failed. It failed here. Okay. It failed here. Even though price didn't get to it, right? It failed here. So here is an engulfing field. See that this engulfing field failed. It was a late engulfing field, right? This is also an engulfing field now. Right? Why? Because now price has broken through it. Okay, and this is an engulfing field, the one that got used. Right? Because we engulfed, price went and came back to break it, retested it, came back, retested it. Now we have an engulfing somewhere here. We have an engulfing here. It's an engulfing. Price react to the engulfing, reacted first, dropped, came back in, dropped. Okay. Do you understand?
Yes.
All right.
Yes, please.
So do I have to continue? Let me see what we have. I think I've already talked about this. So we are going to look at direction. All right. So now before we start doing direction and everything, you need to have a clear understanding of what engulfing is. So your assignment is that you are going to take a pair